morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, December 10th, 2025. I am Frank Ochoa, aka PivotBoss. Happy Fed Day today. We get ourselves another FOMC statement and rate decision. The press conference will follow this afternoon, likely to provide a ton of volatility early in the day, likely to be mostly range bound. We've been range bound here within this 100-point range right there. It's been 9 days now developing within this range, and at the moment trading just 25 points of current total range here heading into the RTH Open. That's 43%, rather 43% of ADR. If we make this 9 days right here, you can see the compression. It's bringing us back to about right here, and that low of 6,800, this high of 6,905. You can see 103 points of range right now. It would normally be about 278 points for a 9-day range. So that's a third of average. There's a ton of movement coming up ahead on this after this Fed date. And what we can see here again, if you get just 300 points of range to about say 250, that's going to be quite a bit, and that's been an amount that this market has been able to get on a 9-day basis. So we could be looking at quite the move up ahead. Once we do break out of this range, we could see again 250 to 300 points of range easy. Do we see a failure, say at 6,800? 200 points down takes you to 6,600. 50 points more and you're at 6,550 and at previous lows here. So that's what 250 points would look like from a breakout from the low edge. Now again, are we going to finish the year on a strong note here with a late year rally? Perhaps that's the case. A failed breakdown and a continuation to the upside could be ahead as well. So we got to see which way do we come out of this range. The other thing is, once we get our FOMC key level, how do we respond away from that key level? Last time around it was taken offered. You continue downward until you see rejection, and then you come back to snap back to the level. ES hasn't quite gotten there yet. Others have. We'll get another FOMC key level today. Do we take it offered and then snap back to the level down the road? Or is it taken bid and then we come back to the level later on? So how we move away from that FOMC key level will be very important. Looking at the NQ here, similar compression here, similar price action heading into today's trade, back and forth, range bound, avoid the middle chop, fade the edges. And again, the bigger volatility comes later on this afternoon at 1 p.m. Central Time in the last couple of hours of the day. That's what we'll likely see a pretty decent high range day, at least, north of 125% at the very least. If you look right here, 125 would put you at right here. That's 170 points of range. Let's bring this back to 1 day. Yep, there we are. And right now, that compression right here, that would be a pretty big move here for the NQ to get at least 300 plus points, but probably even more than that. Are we looking at a 400 or 500 point day today? Easy out of this compression right here. So something we're going to have to watch very closely here later on this afternoon. And the key thing to notice is if we do see a big high range day, say it's a big down day here, it could be day one of a 1 to 2 week increase in volatility. Just like it was last time, there's Thursday. This is a big increase of volatility here, and that was, the next 2 to 3 weeks of trading. So something to keep in mind is once the volatility comes into play here today, it could increase here Thursday, Friday, and into next week. Looking at crude oil. Crude right now, lower at the moment, or at least off the highs of the week. Still trading within the downward sloping channel, still compressed overall. And we're coming into the final portion of this bearish seasonal window where we're about to see a little bit of a bullish seasonal window open up into the first couple of months of the new year. So do we get one final flush, one final shakeout leg, and a return back to the upside? We'll see. We'll keep an eye on this market. If we do, it could be a +8 where we drop, say, in the 56s and rally back towards 64s. Maybe it's a little more than that, maybe a plus 10. But again, that's looking at the next 8 weeks of price action. All right, looking at gold futures, this one right now, super narrow range right here. That compression right here is about 8-9 days strong as well. A ton of energy built up in this range right now. If you can see right here, that's your current compression at 50% of average. An average range breakout would be about 250 points easily. So what are we going to see? Are we going to see something beyond average, which would be about 300 points per the indicator here at a 125% reading? 300 points. That's significant here. And again, this is a 9-day reading. So you're basically looking at what's the range going to be over the next 2 weeks of trading. And it could easily be 300 points and this upper edge of the range up ahead. So is it going to be to the upside? If we drop down and say hit 4,100 and rally 300 points, that's 4,400. That's what a 300-point rally looks like over the next 2 weeks. That would be a check mark move. Very similar to this check mark here, or perhaps this check mark here. Do we get another one up ahead? From the low of the pullback, we may see 250 to 300 points of range up ahead. All right, looking at the YM, also range bound over a multi-day basis. Your last FOMC key level here went offered, came back. Higher high failure, went offered again, came back, and yesterday it was the high of the day. So you can see how these markets really retain a history. Once they're developed, we're going to get another one today. Do we see it taken offered, and then do we come back to the level? Very similar to what we've seen before. Is this one taken bid, and then we come back to the level down the road? So again, how are we going to play off of this FOMC key level today? Right now, YM currently right at the middle of the recent 8-9 day compression here. We could see range bound action anywhere in here, and then over the next several weeks, increased volatility as we round out the end of the year. Looking at Bitcoin, previous session, Bitcoin really picked up to the upside, fell by the end of the day. It really bounced down off the 95,000 level. So you can see right here, 95K, that's the level we've been talking about. If this thing can find a transition day through it, we may actually open up some upside over the next couple of weeks. That could take us back to 112. 112, maybe even higher. So I mentioned before from, say, 92s here, it could be a plus 20 this way. If we fail, it's a minus 20 this way. 95K is that big level. Do we make the move to the upside, or are we bouncing down off the level? It's still in the air right now. It's still very much in the air. However, you can definitely see some bulls coming into play, some bullish price action coming into play. Yesterday, very bullish couple of hours, but it still faded back down. So can we get an expansion out of this range here up ahead, especially on Fed Day? Right here, last Fed Day, perfectly offered. And we still haven't found a strong enough low to get us back to 112. We're going to get another FOMC level here. Do we take that offered and snap back? Do we take it bid, hit this level, and come back? Some things to consider here moving forward. Looking at ETH, this one had a big day yesterday. Big breakout move to the upside. Big push away from the 3,200 level. Nice rally overall. It did pull back a bit from the highs like Bitcoin. Not quite as much, but it did pull back off the highs a little bit. That 3,400 level going to be important short term here. Does it open up the door to 3,650? And we've been inside this market structure right here. It managed to hold the 2,900 level back to 3,650. Does 3,650 lead to a retest and a push down, or do we push through and open up that 4,400? From a FOMC key level perspective, it was taken offered here at 40.10. Straight down again, not the strongest low, making a return back toward that level. We're going to get another FOMC key level today. How do we respond here? Do we come up here and fill this one right away and backtrack? Do we drop, fill, and then fill? Again, a decent bounce off the lows right now. But do we get another round of weakness ahead? Do we get one more rotation back down out of this range? Something to keep an eye on. as we head into Fed Day. All right, that is it for now. We'll see how this plays out the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.